Right, guys, new week, new month. Let's get straight to it. So I'll be the first to admit, I was not expecting last week to sort of pan out like this, going into, big tech earnings, FOMC, etc. But it's quite evident the market was obviously overly hedged in anticipation of the worst case scenario, and we got a lovely reaction in equities, which essentially dragged Bitcoin up with it as well. Um, you can see my assessment was quite correct in that we did get some sort of distribution here at the top. We pulled back into value. This was why I was cautious as we broke down back into this, this multi-week consolidation bracket, whatever you want to call it, and then we basically pulled back up, pretty much rejected off of this composite value area high, and we pulled back to the POC where we got a really nice reaction back to the highs. Um, I don't personally like to take any sort of longer term duration swings around the POC. It's a sort of written rule in my system. I like to transact around the edges, the extreme edges of value. I don't like to take trades here where there's a lot of participation and volume involved. Nonetheless, they can provide nice reactions as we clearly see here. So where do we go from here? Well, the big question is, I mean, based off the sentiment I've been seeing off of Twitter, a lot of people are under the impression that this is going to break off to the races, 28K, 30K targets, etc. That's great to see. But the reality is we haven't really done anything. And I'm not trying to be pessimistic or cynical, but like we basically have just run the highs from last week, and now we're starting to sort of drift again and slowly bleed down. And it's quite analogous to this sort of structure over here. Nonetheless, we need to trade the chart, not our opinions or our heart per se. So there are going to be setups both ways. We can cover that. Let's just move quickly to the S&P because I think it's a pretty. This is sort of the barometer of risk, and I'm no macro buff as I've mentioned many times. There's plenty of guys on Twitter that you can follow for sort of opinions on narrative and forecasting where we're going. All I can say is keeping tabs on the chart is pretty important. So you can see last week we had a beautiful move up, um, and now we're sort of back in this sort of 4100 zone. Very interesting because we've had like back-to-back value days. So just basically compression. This is Friday's session. This is Monday's, and you can see we have sort of the ceiling at about 4140 and a floor at about 4090, 4090, give or take. So those are going to be key areas going forward this week. Typically, when you have these back-to-back sort of basically back-to-back days of sort of bracketing and ranging, you set up for sort of a break from balance. And so any sort of acceptance above this 4100 pivot, then I think we can be looking to target this sort of consolidation over here. The high is at around 4189, 4190. And we've got this yearly VWAP if things get really extended, which will likely cap the market. Conversely, to the downside, as you can see, the move was quite swift and thin in nature, so we left a lot of inefficiencies. We have some VWAP gaps below that are sort of designated in yellow, and NPOC here at about 4070, and a few more sort of anomalies down here. And we have the quarterly VWAP coming in at 3900, which is synonymous with these sort of lows here. And you can see we've got a nice reaction over there earlier in the year. So that's kind of what I think we're setting up for, is a pretty explosive move in one way or the other. You know, a lot of people on Twitter are sort of talking about the fact that this is, the beginning of a new bull market trend, etc. But like I've mentioned, I don't like to commentate on macro because that's not my place. There's tons of great accounts, but from what I've gathered and what I've gathered is nothing has changed. Inflation is still elevated. We have a new sort of potential bit of headwinds in the form of Taiwan, U.S., China relations. And in a nutshell, things just aren't like, we're not back to a monetary regime where stimulus is ample and you know, we can continue to move on up with excessive printing and etc. So liquidity is not rampant, and the conditions are not analogous to over here where things were gravy. So um, look, from a trend-based perspective, it's quite nice to see. This is the first time. This is a simple sort of trend system here, and you can see for the first time on the daily, we sort of poked our head up, um, which is basically threatening to change the downtrend that we've been in since the 30th, the 30th of December, January this year. But I will remind you, we are at key resistance here. I'll just sort of do something loosely, but you get the point. Like the market consolidated here. We had lows here printed in March. Now we're sort of under testing this sort of zone here. So I would say caution is probably warranted, but it is important to sort of acknowledge strength. And I think any acceptance above this like 4,200 pivot, then we could talk about targeting, the mid 4,000s. But till then, I think a cautious approach is still warranted, um, given the fact that the trend is your friend for now. So yeah, let's just quickly. I've lost my train of thought. Sorry, guys. But let's just quickly look. Yeah, so I just wanted to make the point. So like looking for trades this week. The reason why I'm a little bit cautious on Bitcoin is we had this like 4 day composite where we basically put in, back to back consolidation. Um, and we basically formed this value area low at about 23,500 and the ceiling at about 24,150, 24,137, want to give or take. And the issue that I see right now is that the market attempted to break out of this value built up, and then we swiftly rejected at the highs over the weekend, and now we've pulled back. We pulled back below all this value that was built up. And yesterday's session, you can see quite clearly, market made an attempt to rally up. We basically tagged this zone. I took a long down here and then pretty much de-risked here because I know this area is pretty important. And now we've rejected. So to look for longs with confidence, you really want to see the market pull back above this 23,500 pivot. That would be a clear signal that this sort of thing movement here was just some sort of fake out, and we've now accepted back into previous value. But until then, I think a bit of caution is warranted. You can see in today's session, POC is coming back. POC is coming to the low. The volume's being transacted at the lows. So we could be setting up for a nice setup up, but I think it's pretty contingent on how equities fare today. Yeah, just quickly touch on positioning. A reason why I'm also a little bit cautious is like we do have quite elevated levels of positioning in the market, and it's like healthy, from a relative basis. Like there's nothing out of the ordinary here, but I do want to point out the fact that like over here we had hardly any open interest in the system. We still managed to pull back from like 21,500 all the way to 18,600. Again, here, we had a decent amount of positioning pulled all the way back to 18,500. So all I'm saying is there is enough juice in the system here to squeeze. Assuming the majority of the open interest still remaining is aggressive long positioning. So yeah, I think that it comes back to this chart, like the fact that we have quite a lot of volume sort of coming in at the highs here, this high volume node, is a little bit concerning in some respects. So you really want to see, that 23,500, 23,800 level sort of reclaimed, and it's sort of confluent with these zones here. For me, like, I don't think buying the first touch of like 23,500, 23,400 is going to be something that I necessarily want to do per se, but like there is a case that we could come back down again, retest this sort of composite area, value area high, and then pull out the zone. Um, that's a scenario. Another scenario that I could see being baked here is a pull back up into this region and some sort of rejection at the highs back into here. And at which point I will offer the scenario of both cases. If we get, if we get prolonged sideways chop here with a constructive move in equities, and we accept above this 23,500, well, then we can talk about targets of upwards of 25, 26K. On the flip side, I think any acceptance, the longer we spend below this 22,800, 22,500 zone, I think then that sort of calls into question, was this move here, a fake out per se, just to grab these highs, and are we now going to start targeting these lows here? I think the market is not ready for this scenario. I think a lot of people have grown quite complacent, thinking that these are good enough structural pivots for us to really accelerate. I don't really want to say much more, but I personally don't think that that's the case. And if the market continues to show that it's unwilling to accept above this 22,400 zone, then I think we'll traverse this entire composite. So, targeting this here as a preliminary target at 2,600, and then as low as the 19s and 18s. But we'll take it one level at a time. Before I wrap up, I just want to say, just to keep a level head, because it's really easy to just get sucked into all the hype on Twitter and stuff. The reality is, we've got a lot of work to do, right? Despite 2 weeks of upside, if you compare the relative strength of this move compared to what equities did last week, it's actually not that impressive. And I'm not trying to be salty or rain on bullish parade per se, but we haven't even tested the 21 weekly moving average, for example. That's a key pivot in the market to sort of gauge strength. But also these are just anchored VWAPs from key contextual levels, as well as high volume areas, and we're below all of them. So I understand trends start from within and then manifest themselves outwards. So you're not gonna, in order to catch a trend reversal, you're gonna have to be on the lower time frame and really focus on the minutia. But at the same time as well, it's important to not get lost in the hype. And for now, things are very, very much down. I don't see any rush per se to just rush in and deploy a bunch of capital down here. I think the market's still gonna put in more of a base and range, because I'm under the impression that the equity markets, the broader markets, are not in a trending environment per se. They're putting in a larger range, and we are now coming into a very, very, very key zone. So I think caution is warranted. Anyways, I'm gonna wrap it up here, guys. I think I've ranted enough. I hope you guys have a good week of trading and manage that risk. And before I wrap it up, I just want to mention big thanks to the sponsors of this video. Check them out in the description. You can trade a bunch of products on here, and not only crypto, but they offer you equities and various forex pairs and commodities and indices, etc. So if you want to sort of dabble in macros, this is a pretty cool place to check them out. I've been informed by people on my team on the team that if you use the link in the description, you guys are privy to a 10% discount, which is not the case with everyone else, and you're privy to up to a $4,000 deposit bonus. But check the sort of details on that. Thanks a lot, guys.